And welcome to What's Next Wall Street. I am George Alfredas.
And I am not as laughable, Dave Matthews. And this is a show about stocks, crypto, DeFi, and the Web3 decentralized world around us.
Yes, sirs.
Thanks for tuning in.
Yes, thank you. I've got details on all the hot new trending products that everybody is not only talking about, they're using, they're investing in. And this week I'm talking celebs, crypto, and NFTs.
And we're going to show you how to get all the NFTs that your hard drive can hold.
Wait, what?
To hoard. So you want to hoard these things, right?
I think you meant that.
So remember when you used to download music with Napster? Maybe you don't because you're too young in the TikTok world. Now, I said download, not buy. So you're not going to be able to flex these, but at least download them.
Okay. All right. So we've got Greg Krause, lead instructor at OptionsPlayers.com, is our expert. Greg charts a lot of these companies, and those chart indicators can show where a particular stock is headed so that it's easier for you to target that investment potential. So what Greg does is Greg combines technical analysis with fundamental knowledge. So that's kind of the thing.
He drops some knowledge on us.
Yes.
Our goal is to help you be a more informed trader with a tailored trade plan.
Yes.
So that you can stay up to speed with what's next on Wall Street and keep stacking your gains.
Yes. So here's what we want you to do. Click the link below to watch the entire show. All right. You can email us at OptionsPlayers.com or hit us up on social media at What's Next Wall Street with your question. Okay. We can also direct you to instructors or experts over at OptionsPlayers.com. What they do is dig into trading fundamentals, right?
That's right. And the questions on YouTube have been amazing. Of course, you can watch us there if you're listening to us on Spotify, Apple Podcast, or wherever you get your podcast. But it's fun to watch the show if you haven't seen it either.
Yes, yes. Now, whether you're listening to the podcast or you're watching on YouTube, make sure you subscribe, like, and give us 5 stars.
So a couple weeks ago, we talked about the car show that CES has become, and we have some video from General Motors around its latest self-driving concept vehicle.
So excited.
GM unveiled a 2-seat electric self-driving car called Inner Space.
Love it.
At the Consumer Electronics Show in Las Vegas. It's aimed at luxury buyers. It features a glass roof that opens with the side doors and includes seats that pivot outward.
It's awesome.
The company also plans to reveal a personal mobile hotel called Open Space at a later date. The transportable space will be a luxury hotel room that will go wherever you want and have it waiting for you. This is just like the ultimate Airstream.
I love it.
This reminds me of like a coach back in the old days. Now, if you've dread a long distance road trip, you can probably just eat, sleep, Netflix, and chill throughout the ride without the annoying airport security screening that snapping the gloves.
Yes, that is super futuristic. I'm so excited about that. And for once, we didn't mention Tesla. Wow.
What? Oh,
I just did. So, in other news, listen, you better get rid of those 20% Bed Bath and Beyond coupons.
I steal them from my mom.
Okay, so the company says it's going to close around 36 stores in multiple states. They're going to be closed by the end of February. States with more than one location affected include Arizona, California, Georgia, Minnesota, New York, Pennsylvania, Texas, and Washington. In the meantime, it reportedly missed a revenue in its latest earnings report. So analysts were looking for about $2 billion, but it only brought in just under $1.9 billion.
That's whack because all people have been doing is buying crap for their house.
Okay, so we know what that means for BBY stock, but how about Starbucks? I mean, well, we are spotting a trend as a Starbucks in suburban Buffalo, New York is now the second in the U.S. to unionize. Now, last month, workers at another Starbucks in the Buffalo area became the first in the nation to vote for union representation. So how does this look to investors?
All right, so unionization and investors. All right, I don't want the Teamsters to come after me.
Because they will.
Because they'll come get me. And also, my father was a local president of a large ironworker union. So I come from that union background. I'm talking like I had lunches with like the Clintons and stuff growing up because, you know, unions and Democrats, right?
Yeah.
So don't hate me on this, but it's not good. All right. So there's been multiple studies, actual, like when people go, show me the proof. No, there's peer-reviewed studies on unionization and investments. Although it's not like some craziness, okay? It's because we have to make assumptions on some of these, so it's normally about 4%. So what we do is look at about 20 months when they start talking about it until about 2 years after. That's what most of the studies look for.
What does that mean? The trend.
Yeah, so what the value of the stock does when they start talking about it, and then up to 2 years after. Normally, and it doesn't mean the stock doesn't go up, okay, because the market could go up, but it underperforms the market by 4%. So when you're talking about the market gaining 8%, it's doing half of what the market is. And that kind of makes sense because you're taking revenue away from the company if you're paying employees. Now, I'm not saying socially it's not good because employees and things, but I'm saying you're taking cash out of a company and then giving it to the employees. So, of course, that's not
I'm
good.
looking at you like, and what's wrong with that?
Well, I mean...
Because my dad was with the iron workers.
Well, so employees are getting the money, not the investors. And that doesn't actually mean just the employees. It could be different. So say one big issue in this study, or one of the studies that I actually looked at a long time ago, because, in my master's in finance, we actually looked at this problem a bunch, I forgot I'm trying to think of the doctor that did it.
Let's rewind this a bit, because Georgia, you're in unions for acting.
I'm in Screen Actors Guild, and listen, I love it because it means I can only work 8 hours. It means I'm going to get paid a certain thing.
Unions do have good things, but you have to give a percentage of your revenue income.
Yeah. Yes, I do.
But there's overhead.
Right? Yes, I do.
And that's what I'm getting at. There was so some unions, there's a lot of overhead over the top. You have your lawyers, you have everything else. So that could actually take away some from the employees and also make the companies pay towards that too, because sometimes they'll say, hey, you got to pay this dude $16 plus you got to pay our union $1 plus it's going to take $1 out of yours. So, and every union is different, because I'm pretty sure the actors union is a little bit different than a labor union, right? Because a labor union, say you're an iron worker, you're an apprenticeship, right? So you're going to do 2 or plus years as a apprenticeship, and they're going to take a large amount of money away while they train you. Not a large, but you get what I'm saying. Well, if you're an actor, they're not giving you classes for free. They're not making you take classes.
Yeah, but it is really expensive to join the union. I want to say it cost me a couple thousand, maybe $1,500 to join the union 20 years ago. Maybe it was 12, 14. So, I mean, for a non-working actor, which most of us are, you may get one big commercial a year, but that's a lot of money.
And I'm not going to dog on unions, but as an investor, should you work? You should. I want you to think about what companies do you think have been exceptionally well in the last 5 decades? Walmart?
Do they have a union?
Nope. Anti-unions that they get.
Wow.
Amazon?
No union, but they may be starting one.
They might, but they ain't got no union.
Yeah.
Microsoft, all the ones you're talking about don't have a union. But then let's think of ones that did have unions.
Well, think of the last 50 years.
Kmart,
Ford.
Sears. Where you get what I'm saying? So it comes to a point in when hard times become hard and you got to pull back those reins, and now you have all these deals that you have to live up to. You get what I'm saying? So when we looked at most of the studies, what we called risk crisis or crisis risk. So it's more likely during that crisis that a union would have harder times because they have obligations they have to meet.
Right. So I think about unions back in the day, and I know my dad was an iron workers union, so he needed it. And I'm so glad that there's a SAG union, but I think about the United States Post Office and the union that you cannot fire anywhere. If you work for the post office, well, nobody really works for the post office. I say that, but it's, you just go to work and just don't go to work. You get a paper cut and you get to take off because their union, the Postal Workers Union, is so strong. And it's one of the reasons probably that the postal union, the post office is
And then you're going to have society. You're going, oh, you're paying the workers more. They're going to work harder. I don't know that in a perfect world that might be the case, but that's not what's going to happen.
Okay, but I don't want to go on and on about this. But I think that isn't Starbucks known for being one of those companies who treats its employees so well? So maybe them having a union.
Actually, Starbucks started off as very corporate, responsibility, social responsibility. I mean, they are stationed, of course, in a very liberal state. So
that's Seattle, Washington, for those of you scoring at home.
So I mean, they've always been very well.
So
They pay very
it
well.
may do well for their investors to say, okay, they're just keeping with what they do, and this is what they're known for as being this great employer.
But you also
that people
come
wanna
down
work
to
for.
giving the employees a voice.
Yeah.
And this comes to more of what we would like socialism in general. The problem is, and this is going to be controversial for everyone out there, or do the employees know better than the employer or the investor? Probably not, because I've made enough money to invest in it, and you're still flipping me coffee at $15 an hour.
And they don't
so
see the big
who
strategic
knows
moves,
better
right?
on how to run it? I don't know. I own multiple companies. You make coffees. And by the way, I'm from North Memphis, spent my life in the military. I don't have any advantages that you don't got. So you get what I'm saying? So
I get what you're saying, but being raised a union person, and I'm glad we can agree to disagree. I know that you're thinking investment, and I want to think investment, but I'm one of those people who goes to Starbucks every single day, and I'm like, thank you. You know what I mean? I want them to do well. I want them to have a voice.
I'm not anti-union.
But
I'm
think about the
pro-union.
airline unions
I'm just
where-
saying where I
Yeah.
put my money at.
So think
is
about
different.
airlines at the last minute, that 9th hour, they finally negotiated the terms for the pilots of insert airline here, right? Georgia, your future might be, we were not able to put the coffee license or the coffee settlement together. So the union has stricken down your ability to get coffee in the morning.
I can make it.
I
But
just
I'm
don't
just saying.
I don't think Starbucks' labor cost is that high, right? Compared to an airline, which its labor cost is going to be over 50%.
And the laugh that I had there about the airline analogy versus Starbucks is an airline, you're a highly trained individual.
Yes.
A Starbucks
Yeah.
employee, it's a first-time job for teenagers.
It's like Kroger.
It's great. I love it.
Yeah, we
It's good.
appreciate you,
gotta start
Starbucks.
somewhere.
But
How about Target?
Target I don't know why the teleprompter guy's talking, but he wants to get in on this. Does Target have a union?
I think Target, some of them are trying to get a union. I mean,
Yeah,
one
it's
of the
called
bigger
Target. It's only the higher
bigger
end ones.
retail stores that you're going to really think about and has had a union for a very long time is Kroger, and it's been very
yes,
successful.
Kroger's had a union.
So that has been one of the more successful unions. But also with Kroger, they have a very buyback, so their employees make. I'm not going to say they make decent money, but in that game, they make pretty good money in that industry,
So is
and they
Target,
own.
Target the sweet spot?
Sir, you don't have a mic. Please
He
stop
doesn't have a
speaking.
mic,
Maybe we should
and
move on. We're
these
gonna
are
move on.
dynamic mics. If you're not really close to them, we
Yes.
can't hear you. So
You know what? You better look and see if they're hiring at Starbucks because you're going to be fired. Dave, let's talk about ShipStation. We actually only talk about products that we use, and ShipStation is one of those products, and we are so excited to tell you about it. So the cool thing about ShipStation is that whether you're selling stuff online as like your side hustle, like your old designer stuff like me, or you have a small business or a big business, ShipStation can service you. And I love that you can automate shipping. The process is so easy. You can schedule pickups. It just makes life so much easier when there's one less thing you have to do. So for me, Dave, it's like the time-saving aspect of it and just not, I got the kids and I got this and I got that. So it just makes my life so much easier.
Well, I have none of that. I just have a bunch of old junk. So if you're a pro eBay seller like me, or have a garage of stuff that you haul from estate sales or Amazon return pallets, then you need ShipStation.
Yeah.
They have up to 70% off with some shippers, automated packing slips alongside of postage labels, and integration with email tracking numbers for the ultimate ease of use for your small business.
Yeah.
Ship more in less time with ShipStation. Use our offer code WNWS to get a 60-day free trial. That's 2 months
crazy.
free. No hassle, stress-free shipping.
So go to ShipStation.com, click on the microphone at the top of the page and type in WNWS. ShipStation. Make ship happen.
Today's pro tip is brought to you by OptionsPlayers.com.
Yes.
The sponsor of this show. Now, today's tip is regarding order entry and your planned exits. You probably don't play cards for money while disclosing your hand, right? You hold that hand tight.
Yes.
Well, why do you do that with your trades? Your broker and other market makers are in this game to profit. If they don't care if you're a nice person or just a new trader, they want your money. At Options Players, we always suggest traders execute mental stops instead of the actual limit orders. Have you ever entered and see the order get filled only to rip higher soon thereafter, leaving you with a sick feeling in your stomach, meaning you put in a trade order and an amount, and it happens right below your amount? Well, that's what we're talking about here. Use mental stop plans, don't key them in, and mentally execute them instead of showing your full hand. Just try it. See if your play runs longer and don't stop out quite as much.
Right. Okay, this is the part of the show where we get to hear from you. Guys, you can always hit us up on social media at What's Next Wall Street or email us at WNWS@OptionsPlayers.com.
Erica from Cincinnati took us up on our challenge, and she asks, why do bond yields affect stock prices so much? Greg, bond, yield, stock. 3 things, 1 answer.
All right, so there's multiple reasons why bond yield.
He said 1 answer.
Well, there's going to be multiple answers. All right, but I'll make it quick because you'll probably be yelling at me for time when you said that. All right, so bond yield, okay, is inversely related to bond price. It means if the yield goes up, the price goes down. All right, I'm not going to get into a class on bonds, but you have so much money, you can only put it into one thing. So if you buy stocks, you can't buy bonds. Get what I'm saying?
Yeah.
There you go.
Oh, that was good.
That's a
That was
simple.
quick and
That
easy.
is the quick answer. Number 2.
Okay.
All right.
That's a supply and demand problem. Okay.
Yeah, so there's only so much capital. So in economics, if you have this much capital, or we say people that want to go in population, it will shift the demand curve one way. Well, if we take away some of that population and they go to bonds, of course that lowers the price of the stocks, and of course will increase demand for the bonds will go in there. So,
Okay.
but then there's so much because it's more that's what most people will tell you, and I will tell you that is only very slightly the case. The real reason why bond yields go up, it changes the discounted cash flow of a company. And what that means is when I do an evaluation of a company, okay, it's a bunch of math nerd stuff, but let's just say I'm borrowing money at a certain percentage.
Okay.
Right? How do companies get money? They don't go out and borrow money from Bank of America.
No, they sell more shares.
They sell shares, or what that's called equity. So you have debt and equity, okay? Equity is shares. Debt is the company sells bonds, right? So the base bond is the treasury yield. Then other people are a little bit higher. Apple's really close to that treasury. So if they want to make money, most of them sell bonds. So it's costing them more money if the bond rate is higher. Their cash to capital is higher. Therefore, it will affect their whole discounted cash flow.
Got it.
All right? And then there's more in it, but that is what real fundamentalists look at. Most people, if you ask them that question, they don't give you discounted cash flow as an answer. Just fire them immediately. They don't know what they're talking about, and they probably failed all their title exams.
And Apple's changing the dynamics of this fundamentally from any other company, right? They've had stock buybacks. They have more cash on hand than any company.
Apple sold a crap ton of bonds. Everybody has been selling the bonds the last 2 years where the prices went down.
But even so,
Yeah.
like they were doing the bonds and playing the stock game so they could do buybacks of their shares. And they've got their services revenue sky high, so there's no BOM, no bill of materials of hard assets attributed to that. So like Tim Cook, he's literally printing money.
Yeah, I mean, their yield on bonds is less than what they make on their cash, right? By a large margin, which we would call IRR, whatever. I'm not going to get a finance class here, but literally they're borrowing money at basically 1% and making a crap ton off of it, and then buying back their shares, which also increases investors' value. So that's how Apple has really increased so much. Without the low interest rate, I don't think Apple would be where it is. And then when interest rates go up,
they've got cash on hand. So
they got the cash,
yeah.
but once that cash gets used, because you got to think, there's a lot of money Apple spends, right?
They just bought another building in Silicon Valley this week. After they built the UFO, Steve Jobs, like in the Holy Testament,
So
they're still buying land.
So Apple's not going to sell equity. They're not going to sell shares, right? That's not what they do. But they pay back dividends and all that by selling bonds. So when the yield rate does go back up and they have to pay back more, that's going to affect their discounted cash flow, which will, of course, lower their valuation. So that is why the stock prices go down as yield goes up.
But the analysts are still saying that Apple is, still has room to grow based upon where it sits today.
Yeah, go Google, or you can email me at Greg@OptionPlayers. I'll send you a nice little spreadsheet that you can actually look at and type in, I think it's going to make this much revenue, this is going to be the yield, and it will tell you what the valuation is. It's a common thing that I teach my students back when I was a professor.
What do you call this spreadsheet?
Huh?
Magic?
It's actually
Fairy
discount DCF is all. That's what mine is saved as. So you can just Google like discounted cash flow evaluation, and you can get them already and pop up, and you can type in and play around.
Very good.
But
right.
it's all about net present value and a bunch of discounted cash flow stuff.
Okay,
thank you.
cool beans.
Nerds.
So Matthew Fawn in Atlanta, Georgia has a question specifically for Greg. Matthew, you should know that all these questions are pretty much specifically for Greg. So Matthew writes, if Apple were to make a big splash in the acquisition market today, what company would make the most sense? Also, what company do you think Apple wishes they pulled the trigger on before?
I think both of those are my company, which
Questions?
is a proximity
Okay.
Bluetooth company,
Okay.
which basically the iTag and or the AirPods, like everything. Never mind. I invented this shit.
I don't think Apple. First off, acquisitions. I don't think Apple will acquire anything this year. Not large. What I mean by, because Apple acquires 5 or 6 small little things. They've been acquiring like streaming services that were small, because they have so much of the artificial intelligence going on right now. And I'm trying to think in my head, artificial intelligence,
machine learning, and the augmented reality, and they're really working on
augmented reality. So that's
a next
really,
generation display as well. Because if they really are successful with the glasses, which is the holy grail, like look, Zuckerberg bet the whole farm on wearables. Apple, there's no way they're going to do something that goes in front of your face like this.
No, it's going to like pop up off of the
Right,
iPhone.
right.
But they've been acquiring companies for a while, smaller ones for years in that field. And then they have, they always have lawsuits that are dealing. And it's just, I don't see any company that's really worth it. Like I say, Apple can hire anybody they want to make it in-house. They don't need to go buy a company. And all the good big companies that you might think they ought to buy or something, they're just overpriced. Like, come on. Apple didn't buy people when everybody was underpriced. They're not going to buy all these companies you think they should when the market's at its all-time high.
If you don't believe Greg, go to the Wikipedia page for Apple's acquisitions. There's a whole page of all these tiny little companies that they bought around signal strength reading and just like all this random stuff. Even their processor company they bought, which is now making it started with just doing the machine learning chips on the phone. Now it's like the bionic processor. The whole CPU was from
I think their last acquisition was like a classical music streaming service.
What?
Yeah. I think that was one of the last ones.
And they probably had rights to a library that
Yeah,
would fit into the iTunes. And now they're doing lossless and Dolby Atmos. And it probably made sense.
Yeah, so I don't think they're going to be spending over $5 billion on anything. So they could build it in-house. What they should have bought, Netflix. Full stop.
But now they've got their own streaming. And
It doesn't
You know
matter.
what? So it's only $5 a month for the Apple streaming service. I got the free trial for a year.
Right.
And
They've got some great shows.
but
it's not Netflix.
What's wrong with
there's like
Apple?
2 good shows.
Put it like this. Netflix, back around 2016, I remember because it's when I met the teleprompter guy, okay? And it was in Options Players, and we were talking about Apple. That's all we really ever did was discuss Apple. And it was like, who should Apple buy? Of course, it was Netflix. At that time, Netflix wasn't worth anything.
$6
It was
a share of something
it was
ridiculous.
worth nothing.
They only had to deal with Roku,
Yeah.
and Roku had the only player that would play Netflix.
And they could have just bought it, and been like, that's
So
a
maybe they
quarter's
had to-
earnings.
Yeah, but
they didn't. And
Yeah.
then we're like, buy it. And I think it was all over the news, like Apple should buy Netflix, but they just didn't. Because they still acquired things. They just didn't go after it. And I think it might have became an issue of antitrust for, because at that time, Netflix was killing it. And just think about right now, Apple already has antitrust issues. Just now think
wow.
if they own the #1 streaming service on the planet,
But
too.
back in
Huge
2016, my team, we were building Slingbox, which was a way to put your cable box onto the internet, onto the cloud. And that was before Apple allowed third-party entities to put video onto the iPod. We could only run on Nokia and Windows Media phones. So we had to fight Apple tooth and nail to get our codec installed on that phone. So the world has changed a lot. Apple really did have blinders on, letting only specific codecs and demodulation of technology into their device. And they have opened it up significantly.
And then another company everybody was talking about was Tesla.
Oh, yeah.
Right. Well, I don't think, should they have bought Tesla? Well, if you look at it now, the price of what Tesla's at and think, oh, great. Well, no. Tesla does not have the margins, nor will ever have the margins that Apple has. So from a fundamental point, that would not have been a good fit. I don't think, and a lot of people are like, oh, what do you mean? You have Apple's corporation, all right? So you look at Apple's structure, its community, or however you want, how it runs. And then you look at how Tesla is in it. It's probably much more vertical at Apple and way more horizontal at Tesla. So you're going to mix two corporate structures that just don't go together. There's going to be some issues there. And so I don't think I'm trying to think of the word.
The culture of the company.
Yeah,
right?
well, not the cultures, but how they would work when they got together. When they synced,
wouldn't gel.
they wouldn't gel.
There's the biggest secret after the Apple glasses of augmented reality is the Apple car, right? And we're hearing more and more Apple meetings with Korean car manufacturers. So I think that Apple's play will be more like Intel with Mobileye or NVIDIA with here's our chips, here's our driving platform, put it in your hunk of metal, right? And Elon's different because Elon wants to control. His first cars were using a Lotus drivetrain or a body and chassis, right? And then he put the drivetrain and electronics
And then
in.
he had to basically throw away the chassis.
Eventually he threw away the chassis, but he started with a Lotus chassis with the first Roadsters, right? So Apple, I don't think they want, think about all the NTSB, National Transportation Safety Board. I don't think Apple wants to do that. They want to concentrate on chips and logic and cameras and stuff that they're good at.
I don't think Apple leads any market. What I mean is Apple doesn't go, hey, we're first to the market, right? Apple doesn't do that. Apple says, okay, we can do that. Let someone else go set the market. We'll wait until it's
cheap
do it
best
for us to get great margin on it. So Samsung might come out with something a year earlier. Apple can put it in there, but it's just too high priced. So in a year, that tech goes way cheaper, right? Or however you want to look at it. It's not really Moore's Law, but you get what I'm saying.
You're right, because even
and then they come out and they perfect it, and then they shove it down your throat however you like it.
Absolutely.
So last week's show we talked about, is the iPhone 14 going to be worth it? And the iPhone 14 is rumored to have a 48 megapixel phone, which Samsung has had for 4 years now.
Yeah.
But Apple's sticking with 12 megapixels because they're doing so much on the ML, the machine learning side, to improve the quality of a 12 megapixel imager. So the thought, Georgia and Greg, is that they're doing that because the file sizes of the images stay smaller, right? So if you have a 48 megapixel camera, your file size is instrumental to be larger, right? So it's this, just what Greg said. Apple's the polisher, and the Apple Watch, it's sleek, it's beautiful. They treated this as an objet de perfection, which is French for really nice.
Kind of sounds like object of perfection. So I figured that out.
Do you speak French? That's amazing.
Sí, yo hablo español. Oh, you said French. Okay. All right, so listen, if you've got a question, as you can see, we can answer it and then some, or we'll find someone else who can. So hit us up on social media at What's Next Wall Street or at WNWS@OptionsPlayers.com with your questions. Okay, so I don't really like to brag, but I have to. I have been using OneSkin for a couple of months, and I can literally see and feel such a difference in my skin. I feel like my makeup goes on smoother. My skin actually feels hydrated. And in this kind of weather, that's hard. So if you have not tried OneSkin, you are missing out. Here's why. OneSkin is scientifically proven to reduce the skin's biological age. And when I say scientifically, I mean it. So OneSkin's team of 5 doctors, all female, thank you very much, spent 5 years in the lab researching skin and aging to discover OS01. So 4 patents, 2 scientific papers, 2 clinical studies, and 1 algorithm later equals a really happy, younger feeling and look in Georgia.
And with your skin being your largest organ, and that's a fact,
yes,
it's better that you let it age gracefully rather than not.
Yeah.
I love how OneSkin feels on my face and has a cool smell too without any burn that I've had with other lotions. This is my go-to skincare regime. Visit oneskin.co/WNWS and use that code, WNWS, for 15% off your first purchase.
That's oneskin.co/WNWS and use code WNWS for 15% off your first purchase.
So NFTs are the buzz, but what if you want to enjoy the trippy, often crappy, and usually minuscule random artwork and don't want to pay for them? Well, the internet is here for you. Sure, you can right-click your way to making a collection to view on your multimedia TV, Plex server, or thumb drive. Now, these won't be on your ownership blockchain, but maybe you want to have a collection of art like you did MIDI files or MP3s back in the day.
That was way back in the day.
Like me.
Yes.
Well, back then we'd use sharing sites like Napster, Kazaa, and LimeWire. These search engines also had files shared from your own library and thousands of other users on the same networks. These apps let you download and share music from the masses. Wait, isn't that a Depeche Mode song?
I think so.
Close.
Yeah.
Now, most of the file sharing apps like Napster and the like have been shut down long ago by the Recording Institute of America, that's RIAA, and their litany of lawyers who would send letters to your internet service provider to reveal your identity via the internet protocol address. Now, some folks, even grandmas who had their grandchildren over for the holidays, had to fork out thousands of dollars in music industry fines for file sharing.
Yeah.
Many times these were settled out of court, but in 2009, a Minnesota mother was fined $80,000 per song for her small collection of shared files, totaling a tidy sum of $1.9 million.
Unbelievable.
Actually, this case involved 3 trials, 1 a mistrial, and had fines from $222,000, the $1.9 million, and another $1.5 million fine. Now, she claimed she'd file for bankruptcy if the RIAA were to pursue their claim from this infraction. This was all from the Kazaa app, which made it easy to share. Truth be told, RIAA didn't make any restitution from these lawsuits to the music industry, and many settled out of court for $1,000 fines. The team that created Kazaa, though, they went on to found Skype, which sold to eBay for $2.5 billion in 2008, and then sold again to Microsoft for $8.5 billion with a B dollars in 2011. All the ideas for peer-to-peer voice came from what they used to do with illegal file sharing. Isn't that amazing, Georgia?
See, see how I helped you? I mean, never mind.
But let's go back to sharing today. The easiest way to share is with torrents. Now, these split bits of a file up on computers around the world, so only you give a little piece of it from one user, which too has questionable legality in regard to ownership. Now, the search engines for these sites are in fact placed on a central server, and in the past, these have been hosted in copyright-friendly countries like Sweden, who were lenient on handing over criminals to American copyright courts. Now, this changed in recent times, but the somehow bulletproof site for hosting pirated file, Magnet Torrents, who shared files that are shared around users of the internet's hard drive, known as the Pirate Bay, now has an NFT clone site called what else but the NFT Bay. Here, you can download an entire library of NFTs, or pick them off one by one as your favorites for making your own USB stick of content. Now, you won't be flexing that you actually own one of these, and I'm sure the real owner might get upset if you use his image as your Twitter or Insta profile. But hey, it's not like he's going to sue you like the music industry used to. So enjoy the download and questionable art.
So we've told you so many times, watch what your kids are doing, wearing, and listening to, et cetera, et cetera. They can usually predict who's got next in the stock market.
Trendsetter,
yes, exactly. Celebs usually have an eye for what's next on Wall Street way before it becomes mainstream as well. And they can propel an unknown entity like Bitcoin into the mainstream atmosphere or stratosphere. So take Mike Tyson. How about he was on to Bitcoin back in 2015?
In the bloody era?
Yes, basically. Well, no, not that way far back. But anyway, not only did he invest in it back then, but a few years ago, his NFT collection sold out in less than an hour. 50 Cent, the rapper 50 Cent, accepted Bitcoin for his albums back in 2014. Ashton Kutcher was talking about Bitcoin during an interview back in 2013 when nobody was into it. But not to be undone, Snoop Dogg was on it before that. Snoop started making his music available for purchase back in 2012. Now everybody's into Bitcoin, even banks. Remember banks were like,
said they weren't going to have anything to do with it.
Banks.
Good job, Jamie.
Yeah. So the same thing has happened with NFTs. Now, of course, NFTs are something fans and celebs can have a lot of fun with. Now, this was one of my faves. For those of you who are listening to the podcast, you're going to need to check this out on YouTube when you get a chance. But listening to Snoop Dogg's NFT sitcom is almost just as funny. Check this out.
First things first, you gonna shut up. Get your defensive position.
I told you, we need basketball trainers this time.
That's on Hot Shot.
I knew this cat since back in the day.
Well, how much is it? You getting 50 cents an hour.
Okay, you
love
gotta
it.
love Snoop. I love Snoop's social media Abby too.
Do you think he was high when he did that?
Oh, he's always, is he ever not high? Nas is expanding his reach in the cryptocurrency world. He's giving away royalties in the form of NFTs. Now, the NFTs going to give fans a chance to own streaming royalty rights to tracks from Nas's King's Disease and King's Disease 2. Now, the tracks are called Ultra Black and Rare. In total, the hip hop legend is going to be giving up 50% of his streaming rights for each of those
Cool.
songs.
I might do that. Would you do that?
I mean, no. Keith Richards
I like Nas.
is putting a
Hater.
non-fungible token up for auction. His first ever NFT is a 4-second video of the Rolling Stones guitarist signing a black Gibson guitar in silver marker. This is so cool. The guitar itself is also up for sale. I love this, and could fetch up to $8,000. Seems like you could get a lot more for that. But anyway, the Music Cares charity relief auction is going to be January 30th in Beverly Hills and online at Julian's auction. Why did I make the mistake, Dave? Have you seen this auction of checking out all the stuff for auction? And there's so much cool stuff, like handwritten lyrics from Eddie Vedder.
Even flow.
All right, I really want this Scott Whalen Gucci jacket. Okay, look at this, but still.
No. That's Eddie Murphy.
No.
That's
Michael Jackson.
No, that's not. That's Scott Whalen. Okay,
Yeah, you
but
guys have to be
Olive-
watching the show to see the graphics.
Yes, you
there
have
was
to
a
watch.
terrible leather red
That
jacket
was
that Eddie Murphy
awesome.
wore in Beverly Hills Cop.
But listen, all I ever wanted, all
All
that I
they
needed
needed
was
is
that
here.
Depeche Mode jacket. Look at that.
Is that Silk?
Is that the best?
Pilots.
I
Oh
love
my
it. I
gosh,
love it.
that is the best.
Georgia, what can I say? People are people, so why should it be that you and I can...
look so awful. Okay.
We've been friends way too long.
Yes,
That was
way
really
too
showing.
long. So Dave and I are the original wedding singers, all right? But back to NFTs, though. How about a little piece of Tarantino history? Check this out. Remember Royal with cheese?
Yeah, of course.
Of course you do.
They don't have quarter pounders in Francais.
Yes, that's exactly right. So if you don't remember that scene in Pulp Fiction with John Travolta and Samuel L. Jackson, we can't even be friends. We can't now even remember what got me here. So that's it. The consumer trend section is over. If you don't know what that is, you need to go watch Pulp Fiction. I'm done.
Oh, well, hey, I want to get in on whatever that NFT was and
All
drop
right.
some Royale
Super
with
cool.
cheese.
Super
All right.
cool.
Wow, what a great show, Georgia. We'd like to thank lead instructor at Options Players, Greg Krause, for being here today.
Thank you, Greg. And remember, if you've got questions, we will certainly try to help you answer them. We're going to have fun while we do it, and we would love to hear from you.
Hold on. We're having
What?
fun here?
Yeah, we're having fun.
okay, good.
Email us at WNWS@OptionsPlayers.com or hit us up on social media at What's Next Wall Street.
You can, of course, watch episodes of this with your eye rectals at
Yes.
What's Next Wall Street on the Options Players YouTube page, or listen on Spotify, Apple, or wherever you get your podcasts. I am Dave Matthews.
And I'm George Alfredas. See you next time on What's Next Wall Street. And please, please share our show with a friend. It will really make us happy.